Welcome to Remarkable Retail Podcast, Season 4, Episode 6. I'm Michael LeBlanc.
And I'm Steve Dennis.
Well, Steve, we're going to stop everything. Stop the presses. There's a big breaking news. Macy's, Wetzel's Pretzels. We got to stop everything, and we're going to just dedicate the entire episode. Well, no, really, probably not.
Well, I'm going to break some news, too. I feel like I need to go back and do a third edition of Remarkable Retail because this is the sort of strategic partnership that is a game changer.
Yeah.
And I think for all of our customer insight professionals out there, they're just going to want to dig into the case study that said the turnaround behind Macy's is totally dependent upon having a pretzel vendor in their stores.
Yeah, so. we jest, but we both had the same reaction when we saw the press release, and I think NRF covered it in their news as the headline story. I'm like, Anyway, listen, we got a great episode ahead of us. It is a solo episode, which I love and which the audience loves. And thanks again to everyone who's tuning in. Very strong support and great feedback. And this episode is the stores strike back again. So we're going back into familiar yet so interesting and developing territory with the idea of thinking about the role of stores. Yeah.
Yeah, I mean, I think we have talked about aspects of this certainly, and I don't want to preview things too much, but I think it's been really interesting, and we'll talk in the news in a second about kind of some data that supports this, but how physical retail is kind of having its day, despite obviously the retail apocalypse narrative, but I think this whole idea that e-commerce was so accelerated during the pandemic, and yet stores still seem incredibly important, different, but still incredibly important. So we'll unpack that a bit.
There is no question the news of their demise was quite early, and as we always knew, wrong in the way it was presented in the narrative. Anyway, so supporting that, let's jump into the news. Current news. There's a bunch of numbers that came out for January and some other stuff that's happening around. Of course, the news is talking this ridiculous month over month, but talk about your insight about year over year retail in the States and what are you seeing in the numbers?
Yeah, so every month we get this U.S. commerce report, and I don't know that we'll necessarily take this on every time the data comes out, but I think as we emerge from COVID, it's just interesting to see the continuing shift. So kind of the headline, I guess, was that year over year numbers continue to be very, very strong, way above what is typical, though the rate's starting to moderate a bit. And I suspect this is a function of inflation. It's a function of government stimulus wearing off. As far as looking at some of the detail in the numbers, I don't know there was anything that was really all that interesting. I mean, furniture, all things home kind of continue to do well. Auto sales, parts, gasoline being hit by inflation. So some weakness there. But when we're not quite seeing the return, though I think this is going to change pretty quickly, of a shift back to eating out at the expense of grocery. Grocery still looks to be quite strong, and restaurants are kind of But what I thought was the most interesting thing, and Jason Goldberg, our friend Jason Goldberg, was sharing this on LinkedIn yesterday. We're recording this on Friday, but the share of e-commerce to the total actually went down. So there's a little bit of fun with numbers here because physical retail is still so much bigger than e-commerce that even though the rate of e-commerce is quite strong, because physical retail is doing quite well, it actually affected the overall penetration numbers. And Brendan Witcher, another friend of the show from Forrester, was also talking about how he had predicted that this was going to happen. And I we've talked about this kind of rebalancing that's going on, but it's quite interesting after all the 10 years of e-commerce acceleration, death of stores, that we've actually got the first quarter or the first month, I guess, where the share of e-commerce to the total has actually taken a reversal. Now, I think it's going to take several more quarters before we kind of really see how this settles out. But I thought that was interesting and really kind of speaks to some of the things we're going to get into in the rest of the episode. Yeah,
it's actually a good setup, almost as if we planned it. Let's dive in a little deeper. Walmart, a couple of earnings. I want to talk about both Walmart earnings and on this side of the border, Canadian Tire earnings. But let's start with your observation about Walmart's earnings.
Yeah, Walmart reported this week, and while their sales growth was overall kind of anemic, there were a couple of interesting things. First of all, one, and this is just a reminder of how badly some companies were hurt by the depths of the COVID crisis. They had what is it? It's like a $4 billion swing in operating earnings. They had very substantial net income this past quarter, but that compares to losing over $2 billion a year ago. So huge reversal in fortunes there. Their same-store sales in both the Walmart brand and Sam's Club were pretty strong in the U.S., not so much internationally. But an interesting number, and again, this is where we kind of get into this like 2-year stack, 3-year stack. Their U.S. e-commerce sales only grew by 1% year over year. So then you kind of go like, well, what the hell's happening there? But that's a 70% increase from 2 years ago. So again, you have this kind of very strong e-commerce growth, some moderation just because of the real spike we saw during the depths of the pandemic.
Yeah, and I also noticed one little thing that their advertising revenue had peaked. I think it was kind of close to $2 billion, which is just interesting to me because last episode or the episode prior, we were talking about Amazon's finally breaking out their advertising revenue. So it's not the only game in town, right? So, in store.
Yeah, absolutely not.
They got a nice network in store where the vendors can buy what they need to buy and get in front of the customers. So, it's interesting. I just caught that. I thought it was interesting. All right, let's talk about Canadian Tire, this side of the border. Of course, breaking news that today is Friday. They're breaking up the Ottawa demonstration. The borders are clearing. I'm seeing on social media the protesters are complaining that no one's being read their Miranda rights. But of course, this is Canada, and there are no Miranda rights here. So
I was going to say, is that a thing?
That is not a thing on this side of the border. But anyway, our education system fails us every now and then.
Yes, but the dumb is strong in these folks.
It is. But Canadian Tire put out blockbuster results. They've been doing very well. I mean, they're in they're in the right category. They've overcome store challenges. Stores being only able in some ways to operate at 50% in a couple of major provinces. EPS shares earnings was up 5%. Just great numbers. Comparable sales grew 11% in the quarter, 8% for the full year. So Canadian Tire, many pundits many years ago, decades back when other big box hardware stores came to Canada, they thought Canadian Tire was really going to suffer, but they've just strength upon strength, and their logistics expertise is just fantastic. So they're really nailing it on their many banners, right? Canadian Tire, the store, Sport Check, big sporting retailers, Marks, which is more for workwear, and then did you know that they owned Helly Hansen, the brand Helly Hansen? Did you know that?
I did not know that. Yeah. That's interesting.
Yeah, they're backward integrating, so it's just in their expertise in sporting goods. They keep it not keep it quiet publicly, but they don't advertise the connection. But yeah, they're a very interesting company. So if you're listening from the U.S. or elsewhere in the world, and you don't know Canadian Tire, spend a few minutes to get to know them because they're a super well run and really interesting company. So other things in the news. I mean, we were kidding about Macy's, but we've got some other odds and sods in the news to kind of wrap us up. DoorDash earnings or lack thereof. I think that's an interesting footnote, if you want to say, on where we are with grocery and restaurants. What did you think about the DoorDash earnings? Did anything pop out in your mind about those?
Well, this kind of continues the theme of the so-called profitless prosperity. These companies are like, oh my God, look how strong this business is, and yet they continue to incinerate cash. I think DoorDash is interesting. Obviously, the demand being really fueled by a lot of what COVID wrought.
Yeah.
At the same time, you hear a lot of complaints about how high their fees are. Restaurants and others really pushing back on the DoorDash, not just DoorDash, but all those delivery companies' fees. A lot of issues with the drivers being underpaid, not having benefits, and all that kind of stuff. And you'd think they're pretty far along in their technology investments. So, what is it going to take for these companies? Because it doesn't seem to me like it's just a scale issue, right? Like if you've got unit cost issues, getting bigger doesn't necessarily help you.
Yeah.
So at what point do these companies get on a glide path to profitability, or do they really have to start to make some pretty substantial changes to get there? So, but Wall Street seems to like it okay.
Well, and in the restaurant sector, food service is an interesting one to keep an eye on because they're being impacted, of course, very much by COVID, but also, U.S. inflation, Canadian inflation numbers too are quite high, and food inflation is leading the charge in terms of inflation from a component perspective, and that's got to get priced into menus somehow. And these operators got to make money somehow. It's got to come from somewhere. Feels like everybody's going to have to take some pain. The customers, the restaurateurs, and these service providers. So it can't keep going on where everybody works super, super hard in restaurants and doesn't make any money. It just doesn't work, right?
Yeah, I agree. All
right. Well, that was a good, quick overview of the news. Let's jump into our section. The stores strike back again. All right, Steve. Well, let's get into it. We're calling this episode "The Stores Strike Back Again." Now, notwithstanding that we're both Star Wars fans, what are we talking about here?
Well, so I wrote an article for Forbes almost exactly 3 years ago, I think. And I also talked about this idea of the stores striking back in my book. When I wrote that article, and then, subsequently kind of expanded upon it in my book, the point I was trying to make about the stores striking back, it was a bit of this anti-retail apocalypse narrative, which I hope by now we've kind of moved beyond that. But what I was trying to get at was that it seemed like there were quite a few retailers, particularly some pretty big established retailers, that were starting to invest in their stores again. And the fundamental premise, I guess, was this idea that you should see your stores, ideally anyway, as assets, not liabilities. And, that was kind of the prevailing narrative, that physical stores were liabilities. They were weighing folks down. And so therefore you should close stores, you should disinvest in them, kind of use them as cash cows. And I was seeing this, what I thought was a pretty interesting shift. And I think what was going on then was that, number one, there was this understanding that, which we've talked about before, that stores are in fact important in many cases in the delivering this omni-channel or harmonized experience. So if you don't have a decent physical presence, then your digital business suffers, and vice versa. I think this was around the time that the ICSC had their halo effect report, which showed how stores could be very important in driving the online business. So there were a bunch of things that were going on that were kind of defying this retail apocalypse narrative. And I thought it was interesting. And I think Target in particular had announced that they were going to be spending many billions of dollars on their stores. And that was pretty surprising to people, particularly when there was this kind of, aside from the retail apocalypse narrative, there was also this sense that if you're a general merchant retailer like a Target or a Best Buy or a Walmart, you're kind of doomed when it comes to competing with Amazon.
I mean, there's also this paradox, and it's, a couple of 3 years later, we still think about it. And it's a good thing to frame to the listeners, because on the one hand, we see this incredible growth of e-commerce continuing. It's, accelerated certainly during the COVID era, but it was always going to be so. In other words, e-commerce can continue to grow. And so therefore I just need less stores. So this is this paradox, because there's truth in both statements, right? You may need less stores. You've talked about extensively, you probably need your stores to do something different. But ultimately, do you need as many stores if 25% of your product is sold online? I guess that's where you get to talking about what does online retail even mean, and what's the strategic role of the store, right?
Well, perhaps the best way to answer that question, and I know we've talked about this a little bit as well, is understanding the difference between buying versus shopping. And, so much of retail for a long time was really having a physical store be a place to display product and go pick it up. Mm-hmm. And if that's really all your physical store is doing, then there's a pretty good chance that a lot of the value of displaying inventory and having inventory available for customers to take with them, you really risk having a lot of that move online. Ideally, it moves to your .com business. But right. In that sense, if it's just all about having these kind of expensive warehouses and displaying a lot, then I think clearly you need less space over time. Understanding the role of the store is critically important. So if that's all your store is about, yes, you risk having that migrate and continue to migrate aggressively to pure e-commerce. But I think when we started to see the blurring of the lines in this omnichannel harmonized blurred world going on, and stores started to become important to fulfillment and were important in terms of advertising and other forms of service in support of e-commerce, then you have to, I think, say, whoa, not so fast. I was really at that time, the kind of first store strikes back narrative was, let's be careful what we wish for here, because if you just reflexively say we need fewer stores and we need smaller stores and we need to disinvest in our physical stores, you may actually start this downward spiral.
You may actually get what you want, which is in unintentional consequences. You may get yourself a smaller business. Right?
Exactly. I think, there's other things going on, but I think you can clearly see, there's many, many examples of retailers that have been closing stores over the years, particularly the department stores, that haven't improved their fortunes. They didn't have a store closing or too many stores problem, as I often say. They had not enough brand problem. Yeah. So like I said, I think there was this kind of interesting, I was trying to communicate a reaction that, not so fast, or don't be too simplistic about if everything moves online or more stuff moves online. Not everything's moving online, but if more stuff moves online, that means we have to close stores. That means we have to make them smaller. That means we have to limit our investment. So that was the first shift. And as it turned out, a number of the retailers that I mentioned earlier, but you can add Tractor Supply and Home Depot and a bunch of others to the list, because they actually started to make that shift and started to invest in their stores more differently, for sure, but started to realize their importance in their total brand performance. They actually initiated a lot of things pre-COVID that turned out to actually serve them very well during COVID, which, of course, I don't have any reason to think that was the driver, that was a scenario they were protecting against. They were doing it just because it was smart business.
Well, in your mental framework, if I take you back 3 years, and even if I take you back to when you wrote your 2022 predictions, because that's also where this comes up, the store strike back again and again, were you thinking of the competitive advantage of stores vis-a-vis, the fists of stone, as our guest Scott Galloway would describe them, of someone like an Amazon who can, is obviously getting to a point where they're going to get everything to everybody potentially within a very short amount of time. And there's a lot of people who can invest at the pace to achieve the same thing, unless you've got stores. Even then, were you contemplating that as part of the future, in addition to what you're describing as the broader strategic role?
Well, I was. And one of the reasons why I pushed back pretty hard on the retail apocalypse narrative was I felt like it ignored the value that physical retail can bring in certain circumstances, not all. So if you just say, well, everything that can possibly go online will go online, that leads you to do some things that will cause you, as we talked about a second ago, it could make matters much worse, start a downward spiral. But there's also opportunities to counteract some of Amazon's perceived value or advantages, I guess, or just in general, e-commerce's advantages. One of the things I know what's come up many times is that fulfillment in e-commerce tends to be pretty expensive. And so rather than paying somebody to go take the product to somebody, having the customer do the work and come to your store often is way more profitable. And that was the other thing that I realized was at some point, somebody's going to say, well, wait a minute. It's actually, not in all cases, but in many cases, it's actually very, very disadvantageous to our profitability to let customers migrate to the e-commerce channel, even if it's our e-commerce channel. And so I thought there would be some countervailing forces from just a pure profit maximization standpoint. Not to mention you'd like to get customers in your store for, to sell them other stuff or to have a tighter connection with your brand.
Do you think the broader philosophy is changing out there? I talk to merchants who, when asked about things like curbside or store pickup, they see it as, there's, I don't know what percentage it is, but a percentage see it as just an expensive way of doing physical retail. The rest are kind of more aligned to, yes, but as you said, there's a tremendous economic advantage to keeping consumers as part of the supply chain, as one of our guests once said, go pick it up yourself. And where do you think we are on that spectrum? Do you think more retailers today are turning their minds to, really stores can provide that strategic leverage point, and we should get our heads around a different way of doing the math?
I've definitely been hearing more of that recently. Certainly, you had some retailers that realized that and were acting on it. I think there's this aspect of, there's the gravitational pull of things moving towards e-commerce that no one retailer can do anything about, and so you don't want to have a fight with gravity, as I often say, because gravity always wins. But any good retailer, and you know this very well, there are things you can do to merchandise your assortment or set your pricing strategy or create other incentives to get your mix to be more favorable. So I think you have to be really clear about, accept the things you cannot change, but focus on the things that you can. And there are definitely opportunities to mix your way to, or merchandise your way to, a more profitable mix. Probably part of what happened, and when I say the stores strike back again, the first part of that, without adding the additional again, was during the height of COVID. Obviously, we saw this massive shift towards all things digital and online. But at the same time, we saw stores get much more involved in e-commerce fulfillment. And I think that gave many retailers a greater appreciation for the role of stores more broadly. I think it also made it pretty obvious, just from a cost analysis standpoint, how expensive some of this fulfillment was if you had to get a local delivery service to drive it, or even shipping things to customers' homes. Like, I think that was certainly known generally, but the degree to which that happened, or or retailers that suddenly had that be a much bigger part of their mix, like the numbers just, you couldn't escape the financial impact from that. So I think that's also causing retailers to go like, wait a minute, maybe as we hopefully get beyond COVID here, maybe there's a better way of doing this.
Well, I also think that volume in some cases solves some sins. In other words, we had retailers who were getting 10, 20, 30 orders a day to curbside, which is really an inconvenience. It's actually, you can't have much dedicated assets for that. Go to 400 to 500. And that volume may not sustain the way it is today. I just did a store pickup myself here locally. And I'm perhaps a good example. Yesterday I had my groceries delivered to my doorstep, but this morning I went and did a curbside pickup. Went great. And the technology is so much better, the experience. So I think it's accelerated both the acceptance of, and then the volume said, okay, I'm going to start, like, it seems like a not self-fulfilling prophecy, but a virtuous circle of, if we do this right, we can actually be pretty remarkable at it and compete against some people we may not be able to compete against on the same level playing field.
For sure. There's no question that there are certain aspects of all of this where volume is very, very helpful. There's the learning curve, right? So if you didn't have much experience with it, or the experience curve, I guess, where you get better at it and you discover new ways to do it that are better for the customer, better for your economics. Technology is getting better all the time. But there clearly are parts of, I was just talking to somebody this morning about how unprofitable many aspects of the grocery business are when it comes to home delivery. And, there are some, at least at our stage of understanding, there are some immutable forces there that if, you're only selling $20 worth of stuff and you got to pick it and send it through a local home delivery company, it's pretty hard to figure out how you're ever going to make money on that. But that also, I think, forces retailers to think more holistically about, well, maybe that order isn't profitable, but maybe the whole customer relationship is profitable. Lifetime. So I'm not going to sweat the details on aspects of that. And I think in general, the customer lifetime value approach is is a more helpful way to look at things when you're dealing in this digital physical mix anyway. So there's a lot, I think, that was really revealed or brought to the forefront during the depths of the pandemic that certainly some companies were paying attention to, but I think it's just gotten to be much broader. So the store striking back again really happened during the pandemic, where there was just a lot more of an understanding of how stores were actually pretty important to serving a lot of what we label as e-commerce, even though it's really ordered online but fulfilled from a brick and mortar asset.
Now, you touched on it in your comments. Let's focus in on it for the last back half or back part of our discussion, and that's the cost of customer acquisition. So if you take a lifetime value approach, you may not make money on that single individual item, but you've got a customer. You've acquired a customer at what may be a very advantageous rate when you put it all together. I mean, last week we had the great founders of the Citizenry on, who've got a store and also have online, and we talked about, does it make sense to have a lot more stores? Because it seems counterintuitive. But where do you sit in all this narrative around stores as both media, entertainment, and a vehicle for new customer growth?
I think it's always been true that physical stores are important to our advertising or media, as Doug Stevens talks about it. I think that's always been true. We got to a period where as digital became more important, there was this belief that stores weren't so important in all of that, and we could just go directly to the customer with low-cost digital advertising. And there was a period where it was kind of the wild, wild west, and where customer acquisition as well as customer reactivation was fairly inexpensive. But over the last several years, that equation has really changed. And so it is the case now that that stores can be particularly cost effective in acquiring new customers. But I think they're also cost effective in many occasions in reminding customers of you, whether that's you walk past them in the store in the mall or drive past it or what have you. So there's a kind of billboard effect, I think many people call that, of the store. So I think it's been both the appreciation of the stores as advertising, as well as some of the other roles that they can perform beyond just being places to go pick stuff up. But I also think so many, particularly these digitally native vertical brands, were seeing that it was impossible to get positive customer lifetime value given the cost of digital advertising. So the environment has changed over the last few years. That's kind
super important. Yeah, that's a super important point. Yeah, because if you and I were doing this 5 years ago, it may be the case that I don't need another store. I'll just put another dollar into one of the platforms. But now that last incremental dollar, or the return on that last incremental dollar, I think it's up for grabs.
Yeah. So, and that's why, the store strike back was kind of that 3 years ago thing. The store strike back again was a little bit of, specifically what happened during the depths of COVID. The store strike back again, which I put in my 2022 retail predictions, is I think there is kind of this renaissance that's going on with stores because of the diverse roles that they can play, the more kind of hybrid roles. So yes, they're a place to go get stuff, but they're a place to do buy online, pick up in store. They may have a role in e-commerce fulfillment. They're great advertising, perhaps. They're the most, sort of emotionally connecting part of your brand if you've got something that's more experiential or salespeople or what have you. So I think there is this kind of rebirth that's going on. And the data shows that, more stores opened last year than were closed for the first time in a while. But we continue to see the numbers of store openings and significant reinvestment in physical stores go up. And I do think this is a realization of a number of factors that we've talked about, tilting the balance. I shouldn't say the balance, but reinforcing that physical stores are still important. The reason why I don't want to say tilting the balance is because e-commerce is clearly going to continue to grow at a faster rate than what gets rung up in a physical store. So I'm not.
Yeah, I was going to say. I was just actually going to say. To be clear, what you're not saying the brick and mortar will start growing faster than e-commerce. I mean, e-commerce growth, eventually it plateaus. Nothing goes forever, but you're not saying that e-commerce, in other words, the revival of stores or the renaissance of stores does not necessarily equal the slowing down momentum on e-commerce, right?
No, I think overall there's an inexorable pull towards e-commerce. And, there is a little bit, we've talked about this a couple of times, there's a little bit about, what is e-commerce exactly? Because there is the e-commerce where a store is really not involved. And then there's I ordered it online, but the store is fulfilling it. So that muddies the waters a little bit. But, and I think this year, we saw this a little bit last year where e-commerce growth moderated because it was comparing to such a blockbuster year, the first year of COVID. So there are little nuances, I guess, over the next bit here, depending on the category. But no, I believe e-commerce is going to continue to pick up market share penetration, at probably 1.5 points or so a year for the next several years. So you've got maybe physical stores growing 3, 4, 5%, depending on the category. You'll have e-commerce growing probably 10 to 15%, depending on the category. So, that train has left the station. But the real thing is to, number one, don't believe the retail apocalypse. Number two, don't assume because that is happening that automatically means you should disinvest in your stores, whether that's closing stores or just not spending as much money on them. And then the third thing is really to appreciate this hybrid approach and, get really granular on what you need to do, because stores are definitely different today than they were 5 years ago. They will be quite a bit different, I'm sure, in a few years' time than they are today. So it's really getting down to create that hybrid strategy that will be effective, which is a blend of digital and physical, not a kind of either or choice.
Yeah, right on. One of the stores that stands out in my mind is the French-based Decathlon store has just opened up a store in Calgary, and it's an interesting store because it is both an experience store. It is also the Western distribution for e-commerce, and they have these wonderful robots zipping around, and it's all with glass. So I've seen people watching it, it become robots as entertainment, fulfillment as entertainment. I never thought I'd see such a thing.
Yeah, and we talked about this a couple episodes ago about kind of starting with a blank sheet of paper. If you get the opportunity, you're fortunate if you're a Decathlon or a Warby Parker or these companies that are adding a lot of new stores. So you get to not only pick what is the hot location today, which, that obviously shifts over time in terms of where you want to be, both, markets, but particular places within a market. You get to, construct that store in the size and layout and visuals in a way that is modern retail. So that's a huge advantage. But for legacy retailers, it's obviously more expensive to try to subdivide your space or get out of a lease early or whatever. But there's always going to be leases that are coming up for renewal. There may be opportunities to add really different kinds of stores like Nike and Nordstrom and others, Bloomingdale's is doing. So you have to think about, what is the particular role of the store broadly. But when you get a chance to refresh a store, reconfigure a store, put a new store in the market, what is the purpose-built reason for that store that might be complementary to your existing footprint? So I think I'm excited. It can't, as we talked about in the reconfiguration episode, when it comes to physical assets, whether we're talking about stores or distribution centers or what have you, that's way more complicated and time consuming to significantly evolve your portfolio. But there will be opportunities to do that over the next few years. And I hope retailers will think more creatively about how that brick and mortar presence can enhance their overall brand strategy in concert with what they're doing on the digital e-commerce side.
Well, we certainly see evidence of that creative thinking happening. I mean, this Decathlon store actually went into an old Sears store, right? They took a multi-level Sears store and broke it into several pieces and from an empty store into rebirth and some innovative concepts. So I guess that's a nice metaphor or a nice example of how the industry keeps renewing itself. Well, listen, let's leave it there. Great discussion. There's not a theme that we'll be laying down and never coming back to. Stores and the role of e-commerce is really central to to retail these days. So great discussion. And as I said, let's leave it there. If you like what you heard, please follow us on Apple, Spotify, or your favorite podcast platform so you can catch up with all our great interviews and insights, and new episodes will show up each and every week. Be sure to check out our YouTube channel, and last but not least, tell your friends and colleagues in the retail industry all about us.
And I'm Steve Dennis, author of the best-selling book, Remarkable Retail: How to Win and Keep Customers in the Age of Disruption. You can learn more about me, my consulting, and keynote speaking at stephenpdennis.com.
And I'm Michael LeBlanc, producer and co-host of the Conversations with Commerce Next podcast, the Voice of Retail podcast, keynote speaker, and host of the all-new Last Request Barbecue Cooking Show on YouTube. And you can learn even more about me on LinkedIn or MELeBlanc.co. Have a safe week, everyone.